Welcome. Today, we're exploring the world of bookkeeping, unraveling the essential role of a bookkeeper in a business. Bookkeepers are the financial backbone, ensuring that every transaction, big or small, is accurately recorded and organized. Let's dive into what a bookkeeper actually does. At the core, a bookkeeper is responsible for maintaining a company's financial records. They meticulously record day-to-day financial transactions, which involve anything from sales and purchases to payments and receipts. This is often done using accounting software tailored to the specific needs of the business. One of the primary duties of a bookkeeper is managing the general ledger. The general ledger is a complete record of all financial transactions over the life of a company. Bookkeepers make sure these records are up to date, ensuring every dollar is accounted for. This involves reconciling accounts, tracking debits and credits, and resolving any discrepancies. Payroll processing is another crucial task. Bookkeepers calculate employees' wages, ensuring taxes, benefits, and deductions are accurately applied. Bookkeepers record and track customer and supplier invoices and payments. Bookkeepers keep in touch with vendors and customers, follow up on customer late payments, and make sure vendors are promptly paid. Moreover, bookkeepers may help with budgeting and forecasting by providing detailed reports that identify spending patterns and potential savings. Accuracy and attention to detail are paramount in this role, as errors can lead to significant financial discrepancies. Bookkeepers prepare periodic financial statements, namely the balance sheet, income statement, and cash flow statement. Bookkeepers meet with owners and managers to keep them informed about the financial condition of the business. The bookkeeper should safeguard the records and maintain the confidentiality of the business's financial information. Check out my website, Bean Counter, for my free tutorials and courses.